Yeah, what's up guys? Today our topic is on Forex exchange. Yeah, this is for beginners, and also the intermediate or advanced traders can also watch this video to help them remember some certain things in the industry, because the industry is so wide. There are many data that are passing information to the industry. So this is Forex exchange. What is Forex exchange? When someone say Forex exchange, what do they mean by that? It simply means the buying and selling of foreign currency, transaction of different currency. The euro buy the Japanese yen, the Britons sell the US dollar. Once transactions are being made in foreign currency, that's what simply means by Forex exchange. Forex exchange simply is the buying and selling of foreign currency. And we have three different types of trend in the market. We have the uptrend, we have the downtrend, and we have the ranging or consolidation trend. What does the uptrend simply means? The uptrend simply is when the market moves in a zigzag formation to the upside. A zigzag formation to the upside. That's what an uptrend means. When a market is being moved in a zigzag formation to the upside. That's what an uptrend means. When the market is being moved in a zigzag formation to the upside. Let me use a live chart to illustrate. As you can see, this is simply the meaning of an uptrend. As you guys can see here, we have a high that caused this pullback, that gave a high, that gave this pullback, then a high, that gave this pullback, then a high, that gave this pullback, then a high. As you guys can see, the price is being moved in a zigzag formation to the upside. In a zigzag formation to the upside. Price cannot just move straight line to the upside. No, it doesn't work like that, because in every impulsive move there have to be a correctional move to make the formula balanced. So this is a clear example of an uptrend. Mind you, this is a weekly time frame, we'll come to that later, but this is a clear example of an uptrend. As you guys can see here, where I draw the illustration of an uptrend, when I say this is when the markets move in a zigzag formation to the upside. For example, we have the higher low, we have the higher high. Let me use my cursor to illustrate. We have the higher low here, we have the higher high here, then we have the higher low, then we have the higher high, then we have the higher low, then we have the higher high. This is what uptrend simply means. It creates a series of higher high, higher lows, higher high, higher lows, higher high, higher lows. In an uptrend market, one should look for buys. So in an uptrend market, the only things one are permitted to do to align with the structure is to look for buy opportunity. The only thing you just have to do is to keep looking for buys, keep looking for buys, keep looking for buys. Guys, let's just take this live chart for example. When we have this higher low here, then this high, okay, we had this higher low here, then this higher high, then this higher low. If you should have buy from this higher low, just be rest assured that all this move here, you are making a lot of money from the industry. You understand? You're making a lot of money from the industry. So one is only permitted to look for buys in the higher lows. You are not expected to come and look for buy at this point here, because these small retracements that will happen here can clearly stop you out by hitting your SL, then move to your direction. Can you understand? This, you are not permitted to buy from a higher high. You are only permitted to buy from a higher low, because you buying from a higher high is very risky, because any retracements that happened will take you out and still move to your direction. So that's why it's advisable for you to buy from a higher low, not a higher high. Yeah, I think, yeah, look at where I wrote it here. In an uptrend, one should be looking for buys in the higher lows. You understand? This is just what I explained right now. You are only permitted to be looking for buys in the higher lows, not a higher high. Yeah, I think that is that for an uptrend. Yeah, we have a downtrend here. In a downtrend, this is when the market change in a zigzag formation when trending downwards. E.g., it's comprised of higher lows, it's comprised of lower high and lower lows. Yeah, you can see this illustration I used here. You can see my illustration here. This is a high, this is a high that led to this low, that led to this lower high, that led to this lower low, that led to this lower high, that led to this lower low. You understand? Okay, let me go to a live chart so I can get a live example for you to understand. Yeah guys, can you clearly see what I was explaining? In this trend now, we have our lows that led to this high, and this low, then this higher high, then this higher low, then this higher high. Then what the price do here? Price came out the way, cleared this our previous low, telling us that okay, sellers are in control of the markets, changing characters to the downside. So we have our low, then our lower high, then our lower low at this point, then our lower high, and so on and so forth. So that is just how it works in the industry. Price keep giving series of lower high, lower low, lower high, lower low in a downward trend, and in an upward trend it keep giving series of higher high, higher lows, higher high, higher lows, higher high, higher lows. Yeah, so in a downward trend, one is only permitted to look for sell in a lower high. At this point now, just imagine that you sold at this point now all the way down here. You'll be making a lot of money from the industry. So that is why it's advisable for one to understand structure, to know the actual time to buy, the actual time to sell, so you will not complicate yourself. Yeah, talking about the ranging market, which is the third one. The third one being our ranging market. As we can see, yeah, the ranging trend. This is when the market has no direction or decision, either to the up or downside. It is best not to trade on this type of trend until a potential break, either to the up or down, to determine the direction of the market. Guys, this is a worst time that one can trade, and it is very best and advisable that we should all avoid the ranging markets, because in a ranging market you can never get a clear direction of where price is headed to. It can never give you a direction of either a buy or a sell. I'm coming, let me check a live illustration, because guys, I mainly focus on gold. I'm a gold trader. If you guys see my recaps, you can tell that okay, this guy only focus on gold. So that's why you see me, not that I don't look other pairs. Yeah, I look other pairs for study purpose, but trading like only good, just good. Yeah, only focus on good. Okay, trying to get the live chart. Okay, on the ranging market, so I can. Okay, there was. Okay, at this point now, guys. At this point, starting. Okay, let me use. Starting all the way from here, then to this point. It's a ranging market. As you guys can see, this is what makes many people in the industry blow their accounts. Like, someone is capable of funding, like, let me just say 20 accounts in a month. Wow, that is crazy. That is crazy. This is the kind of market that one should avoid, because it doesn't have a clear direction on where it's headed to. So at this point in time, many will be stuck. Okay, let me just give illustration. Buyers will be stuck buying here, want to buy all the way up. Sellers will say no, they will retrace the market down, go up, retrace the market down, go up, retrace. At this point in time, your emotion self will be messed with. Like the market will mess with your psychology. At this point in time, this is a situation whereby you see someone over leveraging because his psychology is messed up. It's go down, go up. As you can see, it stopped out every buyers at this point here. All the people trying to buy at this range here, it stopped them out. Then go up. Still stopped out everybody trying to sell at this range here. It stopped them out also. Then keep going up. So that's why it's advisable for one to avoid a ranging market. A ranging market is a death sentence. Guys, I'm not joking. A ranging market is a death sentence. So it's advisable that one should avoid a ranging market. Wait for a clear break and know that here, this is exactly where the market is headed to. Then you can join the trend. You understand, guys? So this is just for the type of trends we have. So by tomorrow we'll be talking about time frames, because we have different type of guys, you can write this out, you can jot this out. It's very helpful, very, very helpful. This is a knowledge I paid for, which is being given out for free. So guys, you can write this out, and please guys, do ensure to subscribe to the channel, turn on your notification button, like every single content that's been posted here for the growth and betterment of all of us, because this is for our own good, guys. For the growth and betterment of all of us. And as I state here, tomorrow we'll be talking on time frames, because we have different type of time frames in the market, and as a trader you need to understand every single time frame, because they are of most importance to you, because every single time frame has its own different perspective towards the market. So guys, turn on your notification button whenever I drop video, you subscribe to the channel, you like, and turn on your notification. You can also drop a comment on whatsoever topic you want me to emphasize on, and I'll be glad to be of help to you. Thank you guys, and have a blessed day.